Hi, and welcome to the Money Pitch, our startup competition web series on LinkedIn Live, sponsored by MasterCard. We have real entrepreneurs and real VCs, and real money is on the line. So the Money Pitch is our startup competition that we usually run live. But as we pivoted to digital, we realized that there was an opportunity to really showcase and give more attention to our entrepreneurs. So we've created a 4-episode series, and this is episode 3. So if you missed the other 2, you're going to have to go back and get them. And we have great VCs here who are going to bring tough questions and decide which of these startups is going to move on to our Money Pitch finale, which is going to be during the week of MoneyFest. So first, to begin, I want to introduce you to our judges. The first judge is Melissa Frakman. She is the founder and managing partner of Emphasis Ventures, aka EMVC, which supports early stage fintech in India. And she has led South Asia investments, new market strategy, and partnerships over $1 billion for Fortune 500 companies. So welcome to Melissa. Our second judge, it's good to see you. Our second judge is Howard Morgan. He is the co-founder and chairman of B Capital. His research on user interface technology and the optimization of computer networks was critical to bringing ARPANET to Philadelphia in the 1970s. So he has been in this industry for a long time. He has since been a professor at Wharton and Cornell. He helped find Idea Lab with Bill Gross, and he served as president of Renaissance Technologies, which he founded with Jim Simons. Welcome, Howard.
Thank you.
And our third judge is Ron J. Williams. He is the Senior VP and Head of Program Strategy at Citi Ventures D10X Consumer. I'm going to get that wrong every time. He was formerly their entrepreneur in residence, and he has founded, built, invested in, and advised on peer-to-peer, sharing economy, marketplace, machine learning, and social commerce companies. So welcome, Ron.
Thanks for having me.
Okay, so are you guys ready for the first entrepreneur's pitch? Let's get to it. First up, we have David Davies, the CEO of AgUnity. AgUnity is tackling issues of poor connectivity, a lack of digital literacy, and a lack of trust with a smartphone and blockchain solution for the world's last mile communities. So welcome, David. You're on.
Thank you very much. So this $30 AgUnity phone will enable a smallholder farmer to lift herself out of poverty. Our phone is completely reinvented to be relevant and useful to the lowest income farmers in the world in a way that no normal phone or app can. We improve trust and cooperation between farmers, buyers, and connect them to markets and financial services with a simplified interface designed for people that have never owned any technology before. And we partner with ethical commodity buyers like Fairtrade Organisation and NGOs like World Food Programme and USAID to provide thousands of these phones all over the world, from Colombia to Ethiopia to Papua New Guinea. And we also work with governments during the pandemic to help keep their food supply moving and farmers still earning a living income.
Okay, judges, you're on.
David, do the farmers pay anything for the phones or for the service, or is there a commission on the goods moving through it?
Yes, there is. So we make money in 3 ways. We charge a subscription fees to the phones, and sometimes that's paid by the NGO or commodity buyers, so the farmers may not be paying that themselves. We also collect transaction fees when the farmers buy things like solar lights or use transactions through the package. And we make a commission when we consolidate the commodities they're selling, like cocoa and coffee, and connect them to buyer markets, playing the role very similar to what Alibaba does for manufacturing in China.
And David, can I ask, is this capacity building? So if farmers succeed on platform, is the future to help them kind of grow their businesses, kind of their farms locally, or is this sort of stop it, help them sell through safely in this environment today?
No, absolutely. We see the farmers, well, firstly, in a couple of our instances, in Kenya and Papua New Guinea, we saw the farmers triple their income in a single season. And that was really because they cooperate and collaborate better as a group. They can do things at scale, and they can buy and sell together more effectively. Then, after we do that, the application is a platform, so we can push down other services, and we find that the farmers are buying new seedlings, new implements. They're using the whole platform to improve their lives in many ongoing ways.
David, you mentioned you're already in multiple markets and want to go more global, but telcos and startups all over the world are working on last mile distribution and financial inclusion. So how does your platform stay agile enough to partner with all these very highly regulated, diverse countries?
Yeah, so we're not actually, we can deploy on any Android phone. We clean off the Android and we put our own version of it on. What we're doing is making the phones accessible for people who have very low literacy and haven't had use to the phones before. And our solution is essentially a record-keeping system. It's not mobile money. We deploy those as applets on our platform. So we're not regulated, and we work in many, many different environments.
How visual is the interface versus language-based?
Yeah, many of our farmers cannot read at all, and we've changed the interface so it boots up like this, and it has very large symbols. So when I'm handing over a crop or I'm getting cash out, I press the blue circle. And we key people around the colours and the geometric shapes. So even though it has language, and we've translated it into about over a dozen languages now, it's not dependent on the words. And the process that the application follows goes by a simple step. So we don't do more than one thing in a screen the way you would do in a normal, say, Uber app. It's what are you handing over? That's one screen, that's one decision. When do you want to hand it over? How much does it weigh? One step at a time. So specifically designed for people that are just not used to technological platforms.
And in terms of their ability to take whatever currency they earn in platform, off platform, and really honestly to build also on Howard's question about literacy, kind of a numeracy question, you know, how easily can they both kind of understand what they're earning and then get that off into whatever ways they might need to spend, use, et cetera?
Yeah, so even though farmers may have low literacy levels, they usually have very capable with numeracy. They understand money and they understand things. You can't really function without that. We don't actually have a financial system, so we tend to connect with banks and micro money services and other ones and give them the ability to transfer from the cooperative directly into their bank account. Or directly into M-Pesa in Kenya, or for those examples. So we're really the record-keeping system and the bit that keeps them together, and then they move the money out of that to use it in other systems. But frequently what we find they do is want to order through the cooperative. So one of the most common things they do is they'll bring their cocoa beans or coffee into the cooperative, and then rather than bringing cash home, and particularly for women farmers that's a problem, they much prefer to leave the money in cooperative and order a solar light or order some more seedlings or order something they want to have, rather than bring cash home where the family's going to turn up and everyone wants it, or they might risk getting robbed or other things. So it's a way of financial securing, and that's particularly important with a slight majority of our farmers, about 60% are women, and they find the system gives them a lot better security.
Are you using any voice input-output? Because that things that Google and others provide.
Yeah, we're working on voice at the moment for simple functions. It's very different because we move across different regions. So even say in New Guinea, where we're in 6 different regions, they have very different ways of saying things. So voice is very complicated in our instance because we're dealing with both languages and dialects.
And can you confirm who are your true customers? So as you scale, which kinds of institutions are your targets?
Yeah, so our customers are the lowest income farmers in the world. People with a few acres of land and usually a couple of dollars a day below the poverty line. And they're the ones that, our competitors like, say, Farm Force, they can't address down into that market. And that market is about slightly over 1 billion people that still work on small-scale farms and live in poverty. And we connect to them via organisations like Fairtrade, which has 1.7 million, World Food Programme, which has 9 million, and USAID, which just eclipses all of them. And so those organisations use us as their way of connecting to the last users. And that's how we get our rollout into places which would otherwise be impossible to reach.
Rachel, you're on mute.
You're on mute.
Of course I am. Thank you so much, David. That's it for this one. I appreciate you guys letting me know. Oh, great way to start. Okay, thank you so much, David. We're going to launch our Slido poll now, so our audience can begin voting for their favorite startups. So you go to slido.com, #money2020, or click on the poll link in the chat box and vote for the pitch that you think needs to move to the finals. And we'll give the judges your input at the end of all the pitches. So next up is Trent Bigelow, co-founder and CEO of Track, which is trying to make the difficulties and surprises that come with being self-employed much easier to manage. So welcome, Trent. You're on.
Hi, everybody. With what's going on in the world right now, thank goodness that all of us on this call and many of the people that are tuning in, that all of us have employer-provided benefits. But for 57 million self-employed Americans, they don't have those benefits because they are their own employer. The good news is that Track has created a way to make the apps that already pay or serve independent workers the hero. These apps can increase the value of their relationship with 1099ers by easily adding portable benefits to their customer experience, building atop of our platform. Our APIs automate the detection of taxable income or deductible expenses and pre-tax contributions. Track makes it easy for apps to create a self-withholding process for their 1099ers to make contributions to taxes, healthcare, retirement, insurance, and a lot more. Our launch customers are currently implementing and rolling out these features later this year. Track is the portable benefits API that the 1099 economy needs right now.
So love this space. Who do you see being your primary competition? It's become a very frothy market really quickly over the past couple of years. And who do you feel like you're competing with most directly?
Interesting. So we really feel actually like we're kind of inventing the portable benefits as an API. I think you're totally right that there are many competitors, segment, by benefit segment by benefit segment. We actually kind of see ourselves as being kind of that glue, that interconnection between those third-party portable benefits and the companies that want to embed them into their products. So I think that, sometimes we see people compare us to Stripe, which I don't really feel is a very fair comparison. It is true you can move money with Stripe, but I think the future, especially with like vertical neobanks and everybody's issuing debit cards inside their products, we see this as an opportunity to make those products actually more valuable by making those accounts, wherever they are, smarter, even if we're not the ones moving the money.
On things like health benefits and so on, do you try to connect them to insurance exchanges or providers, or I assume this is for people like TaskRabbits or Uber, Lyft driver kind of things. How do you connect them to the possible benefit providers?
Yeah, I mean, you're right. It's everybody from the TaskRabbit runner all the way up to a very successful entrepreneur, solo business owner, attorney, doctor. The way that we connect them with these portable benefits, again, is by partnering with the best-in-class third-party portable or benefits providers. So you used the example of a market exchange for health insurance. There are many companies out there that do it well. Again, we haven't announced yet who we've partnered with, but the idea is that those companies should continue to focus on offering their experience. It's our job to make sure that the contribution or the payment is done in a way where the actual end user feels like it was just done for them automatically. Again, much the way that a W-2 employee has all the deductions off their paycheck before they do.
Agree that this is a really exciting space. Could you tell us more about your traction so far since launching?
Sure. I can say that we have just actually hit our 10th launch customer. I think only the three kind of, I call them preview customers, are in the PFM and FinTech app space. One app that we're really proud of is an app called Lance. They're working on some really cool things. They use our tax technology, our calculation, and signals to know exactly how to route what money where for different goals. There's another great app that I think is building great things, another app called Wingspan, that is taking a different approach to building kind of the all-in-one freelancer PFM and invoicing system.
I love that. I was actually wondering what your relationship, when I was asking my first question, I was wondering specifically about Lance. I didn't realize that you guys were powering their tax calculation. Given that, and I agree with you on the notion of, I think we're trending towards, effectively the customized bank for kind of micro segments. I think is, we're all going to have exactly the services and sort of extended services that we need. Where does this go? So there's the health insurance, the health insurance tax to start. Where do you see this going?
Yeah, we started with taxes because that's the one thing that every single independent worker, self-employed person, small business owner, they're required by law to pay their taxes. And that is something that you have to either seek professional help, and even after that, still actually have to do the work of setting aside the money so you don't spend it, which is the really tough part that normal employees don't ever have to deal with. That was the beginning. But again, think of the W-2 pay stub and work your way down. Taxes is the first deduction. The next deduction might be to your solo 401k or your retirement plan. The next one would be your portion of healthcare expenses and premiums. In the case of the freelancer, that's the entire amount. But it could be for other saving goals. Our approach is looking at every kind of possible self-contribution through the lens of increasing net income for that independent worker by decreasing the effect of taxes on their income.
How many state and local tax jurisdictions do you deal with other than just the federal?
So today we're live with just federal, and we're in the process of rolling out to, I'd say, 80% of the population coverage by working with the 12 largest, most populous states. And that's something we're rolling out at early next year.
And do you actually, you partner with a withholding provider, or do you actually do the withholding?
So we actually are pretty agnostic. We have our own system where we can do the withholding for the user, and that's what we started out with. But again, going back to the kind of the vertical neobanking of the world, it became pretty clear that we shouldn't be competing for those deposits with our app partners. We would be much more valuable, much more scalable if we are simply giving them signals so that they can move money over their own rails how they see fit.
And are you charging a monthly fee, a subscription fee, a percentage fee? How do you fund it?
Yeah, I think that the Plaid model is a really good one. Active users per month that we charge our partners. Our partners are then, of course, welcome to build this into a higher paid tier and get people to move up. Offer this as a free way to acquire users. But we've definitely made our pricing extremely scalable, and we only charge for what you use.
Not to ask I'm sorry, go ahead. Is somebody else going to jump in? No. The moat question, I'm very curious, this is super interesting. How do you protect from Lance sort of waking up and deciding to disintermediate you guys and kind of do this themselves?
And further to that question, also kind of API marketplaces or more full offerings that would serve the same clients.
Yeah, absolutely. I think the way that we don't get disintermediated by our own existing customers is by continuing to make it easier for them to use our systems rather than building it themselves. And so if that's a matter of making the price more responsive as the market kind of catches up with where I think we are, that's one way. But we always need to actually be building out the next contribution feature. And on top of that, I actually think there's a pretty big benefit. As benefits become more portable, you're going to actually have to deal with the synchronization between, what are you making on Uber? What are you making on Lyft? Because those drivers are working for both. And I think if you have these walled gardens where every single app has their own benefits, it's not going to be as valuable as if those benefits talk to each other.
And are you using the APIs of the providers to get to them? The Ubers, Lyfts, and so on. Are they comfortable sharing those APIs or not yet?
They integrate us, they leverage us, and they build it into their own app. So thank you very much.
Okay, great. Thank you, Trent. That's it. Thank you so much.
Thanks, Trent.
So you did great. The audience, don't forget to hit the link in the chat box. Go to slido.com, #money2020. Tell us who you think should move on to the finals. So next entrepreneur is Shmuley Goldberg, the CMO of Identic. They are taking a new approach to the digital identity conundrum at the heart of all online interactions. So welcome to Shmuley.
Thank you so much. So if you're an online company, e-tail website, subscription app, financial service, you need to make sure your customers are who they say they are for many, many reasons. As you mentioned, this is the heart of today's digital world. Until now, the only way to do this, however, was to actually give that customer data away to a third-party data provider who would validate whether or not it matches some person that they had on one of their databases. This is horribly ineffective for numerous reasons and horrible for privacy, as we saw with the Equifax breach and many others. So we created Identic, the world's first peer-to-peer, fully anonymous identity validation network. Our members are all B2C websites, apps, services who are working together to validate new users, fighting fraud, and creating a better user experience without sharing any data whatsoever. So it's better for the customer experience, as trusted customers are onboarded faster and friction-free, better for fighting fraud, as bad actors are easily identified, and much better for data privacy, as no customer data ever leaves your domain in any way.
So how does it work? You send a request to the customer site, to one of your peer sites, and say, I have a Howard Morgan here applying for whatever, and they say, we know such a person, or, I mean, give me a little more.
That's the limitation of a 60-second pitch. I'd be happy to. So we use something called multi-party computation, which actually is a branch of mathematics that's been around and validated and battle tested for years. Your phone uses it every single time you go to a banking website, for example. But we're able to validate that two different individuals have the same exact information on their database without either of them ever exposing their information to us. And there are several ways that we can do this. The one that we have gone with is particularly efficient, which is why we're able to validate tens of millions of identities and work with customers that have hundreds of millions of identities. But essentially, when you see a user for the very first time, you take their information, use that to create a one-time query, you distribute that to the network. It cannot be interpreted mathematically back to who the original person was, but when other people run that query through their network, they get a response which they then send to you, which you can interpret whether or not they know this person or not. So a certain number will only come up if this identity existed on their database, and a whole string of any other random number will come up if they don't. But they don't learn anything about the identity being asked. They don't even know if they're saying yes or no. They get a number in, run it through the database, send it back.
And typically, how many peers do you send something out to?
So we need to hit, to be honest, single digits to give us a good enough consensus. I'll give you a small example. If I see you for the very first time, and I'm let's say an online retailer, and I get a positive ping back from a video streaming company, and another one from a ride-sharing company, and then two more from two other retailers that you know. And they say, yes, we've known this individual for X number of years. We've done, Y number of transactions with them, and we've never had any issues with fraud. That gives us a very high level of consensus. And what we're looking for is consensus. So it doesn't matter the number of yes, no's we get. It's the overall companies we're working with. What percentage of them would we expect to know you, and how many of them know you, and what do they say about you?
And so you're starting with retail. It looks like that is a natural fit. Is that the rest of next year?
Yeah, I think our strongest areas, so to speak, are ride-sharing companies, gig economies. Online marketplaces are huge. Every online marketplace, you need to know both that you can trust the seller and the buyer. We also have a big fit within the financial world as well. And ticketing, online services, and essentially any website where you need to make sure your users are who they say they are.
So
but, financial services and retail is one of the early ones.
And is it fast enough? I guess I'm pointing towards the direction of like real-time fraud detection for like payment processing. Like if I swipe my card, can you guys be that function at that sort of point of the gateway to kind of?
It's a very good question. So we're not fully strictly real time. We take about 2 to 3 seconds per query, but our use case is one where you create an account for the first time. So you go to a ride-sharing app, you create an account. The first thing they need to know is, hey, is this person who they say they are? If not, then that should be a big red flag for any ride service company for a number of reasons. So we normally validate at that point, and then we would validate users throughout the lifetime. So for example, if you reset your password or you added a new credit card, at those points in time, we would validate the identity. It's not normally used at the point of sale itself. So real time, it's, as I said, it's 2 to 4 seconds, but the use cases aren't normally real time use cases.
Got it. Thanks.
Shmuley, we may have covered this while my internet cut out for 1 minute, but in order for this to succeed at scale, are you building a sort of a network of peers that are opted into the system to provide data?
That is exactly it. So we have a very unique business model where, because we don't own the data, we don't see the data. We're the only company that says we don't want your data. Our peers essentially work together. So if you make a request, you pay a query, you pay a credit. If you answer somebody else's request, then you would get some credits back to yourself, which means that we're actually encouraging large companies to join, because if they have hundreds of millions, or some of them have billions of users on their servers, they can get the service for very, very cheap, and sometimes even for free, because they'll be answering so many questions. We are dramatically reducing their cost of fighting fraud and identity, and we're removing for them the question is there an ROI of this query, because I have enough credits in my account that I can ask as many as I need.
Are you disadvantaging new users? I mean, kids coming, going into college, or people who are just starting on the internet and so on?
Not at all. It's an excellent question. The truth is, if you were a new user on a website today, you would see the exact same user experience you already have. You would need to validate your phone number. You would need to validate your email address. You need to do a one-time payment on a credit card. What we're saying is, yes, you'll have that friction the first, second, maybe third time you see somebody on our network. But once you hit the fifth, sixth, seventh, such as, look at your phones, look at your apps now, all of those companies will never have to ask you to validate your phone number ever again, because all the other peers in the network will say, yes, we know this is their credit card. We've seen it 40 times. We know this is their email address. We've seen it 100 times. You don't need to send another click here to validate this email request.
And so you charge basically for X credits, for some package of credits, and then companies get the puts and takes, and then you net out at the end of that. Is that the way you make?
Yeah, I can't dive too much into the way that we've built the financial model here, but ultimately, it's the most important thing is that we've built it to be fair, because you people are getting credits when they help, and they give credits when they make a request. We've had to find the financial balance that means they're incentivized on both sides. So the pricing almost balances itself out in the market quite nicely.
Okay, thank you guys. Thank you, Shmuley. That was great. Thank you. So
Thank you.
I have to do another quick reminder to the audience. Go to slido.com, #money2020, support your favorite pitch. Okay. Up next is Ryan Chen. He is the founder of Sparker, which is a platform that allows small business owners to get instant and transparent financing options when purchasing business equipment. So you got to think Affirm, Afterpay, and Klarna, but for small business. So welcome to Ryan.
Good morning, everyone. So small businesses are the drivers of the U.S. economy, with over 30 million SMBs employing over half of the U.S. American workforce. While all of these businesses are unique, the one thing that is in common is that they all need some type of equipment to operate. If you think about restaurants needing ovens and fryers, doctors' offices needing dental chairs and x-ray machines, every business needs some type of equipment. Now, surprisingly, the vast majority of businesses will finance their equipment, but the process for them to do so is incredibly archaic and time-consuming, requiring paper applications, dozens of calls, hundreds of emails, and yes, even faxes. So my team and I have created a solution to replace people and paper with software and technology. So Sparker is a software platform and marketplace that empowers equipment sellers to offer instant and transparent financing options directly at the point of sale, allowing transactions that normally take weeks to complete down to getting approved with just a simple click of a button. I've been in the equipment leasing industry for over 12 years and have helped over 6,000 small businesses finance over $100 million of equipment. Since the launch of the Sparker platform, we've already originated over $10 million in equipment loan applications, and we're growing rapidly. Thank you very much.
And who is the financing body for? So who actually does the loans?
Yeah, so we're not a balance sheet lender currently. We actually work with a network of specialty lenders that actually fund the transactions that we originate.
And based on your experience in the industry for the past decade, what problem are you specifically solving? Is it speed or accessibility?
Yeah, so one of the biggest challenges when we talk to the equipment sellers that we partner with is how do we get that incremental customer approved instantly, right? Because right now they're waiting anywhere from 3 to 4 days to hear back from a bank or broker whether or not the transaction's approved. And that's significantly impacting their sales cycle, right? So the biggest advantage of using a platform like us is giving that instant decisioning directly at the point of sale.
And what is I'm always curious, in any sort of place where there's a broker, in a value chain where there's a broker, like New York City real estate,
Sure.
Brokers are kind of much despised, but also really hard to dislodge, right? They provide some fundamental value to the sellers. I'm curious how easily, you guys have already done, it sounds like some volume. What is the real role of the broker here? Like who does the broker provide the most value to right now?
So, I mean, we're providing value not only to the equipment seller, but also to the small business owner, right? Like we need to be able to deliver instant decisioning so they know instantly and transparently, hey, this is how much I'm approved for. This is exactly what my rate is. This is what my monthly payment is. And so the value is really not only to the equipment seller, but also to the small business owner.
And you're giving them better economics? Like I'm just curious, like what if you did a side by side with a broker, time makes a ton of sense. Right. Is there other benefit? Like sometimes the broker is still in the relationship with the value chain because somebody doesn't have to think about it, right? There's no, like in the process of underwriting, is there any drag that you guys are reducing in addition to time, like paperwork, better economics?
Right. So we're trying to make the process as frictionless as possible and reducing as much paperwork as possible. So this is a digital experience end to end. Whereas right now, they're filling out paper applications, they're signing documents, on paper. So really the value is not only the time and decisioning, but also reducing the friction in the transaction.
And what information are they giving you? Is it a sort of a 1-minute application with DUNS numbers and EINs and things like that, or is it?
That's exactly right. So it's a 1-minute application, and all of the information that we collect is top of mind. So it's not like we're asking for EIN numbers. Using our AI, we're actually able to gather that directly from the Secretary of State, and so that they're not inputting federal tax ID numbers or DUNS numbers or anything like that they would have to look up.
And are they putting in financial information about their business or not?
No. So we're taking a look at a number of things, but mainly just the corporate name and then also the personal information of the business owners involved.
And is it tied to individual purchase only, or once you've approved the buyer, it becomes some kind of line for them on an ongoing basis?
So right now it's tied to that individual purchase, but the goal is that we're able to provide them a line of credit so that they can purchase whatever it is that they need specifically for that business in the future.
And is this just around that idea of like habituation? Is this, for now, is your go-to-market to directly market to the business owners, or are you going through the vendors or the bank? Like what?
That's exactly right. And so right now our goal is to build a platform specifically for equipment vendors, because they're the ones that have the sales force to get that next incremental customer, right? So there are no shortages of, SMB lenders out there or marketplaces. But the question is, how do we get that next incremental customer? And so we do that by, partnering with the equipment vendor, giving them a software that empowers them to sell more equipment.
And for them, it's one line of JavaScript on the checkout page, or?
So we create a landing page for our equipment vendor partners where they can have their customers apply. And right now we're developing out a mobile application that we're anticipating to release at the end of next month.
And how do you see the addressable market for this in the US?
So, that's a great question. And so, the equipment finance industry is a $1.3 trillion a year industry. What we're targeting right now is what's called the micro to small ticket segment, which is under $100,000 worth of equipment. And we've identified that to be a $400 billion opportunity per year.
And who's in that segment in terms of like type of business predominantly?
Well, there's not really anyone who's doing it from a tech angle. Obviously, you have incumbent banks that are doing this, the Wells Fargo's, Bank of America's of the world. You have traditional brokers who are not tech enabled and SMB lenders.
And also underneath that 400 billion though, what types of businesses did sort of what majority? Like it's not construction, right? It's not.
Yeah. So
it's not
I mean,
folks with,
as I mentioned, we concentrate very heavily 3 verticals, hospitality being one, but obviously it's been impacted by the pandemic. But 2 recession-proof industries that we're going after right now very heavily are like the medical industry. We also do automotive repair, and so those industries aren't as impacted right now currently by the pandemic because people just aren't spending money.
Okay. Thank you so much, Ryan. That's it for this one. I just have to remind the audience one more time, don't forget to go vote by clicking on the polling in the chat box at slido.com, #money2020, and vote for your favorite pitch. So we're up to our very last pitch of the hour. Please welcome Tobias Schweiger. He's the CEO and co-founder of Hawkeye. It's a global software platform to monitor financial transactions in real time, delivering effective AML compliance to financial institutions. So welcome, Tobias.
Thank you, everyone. Thanks for that introduction. It is an infection. The diseases our financial system is dealing with are called money laundering and the financing of terrorism. Hawkeye, however, has an answer to help financial institutions address this problem. Our business is dedicated to supporting banks and others in fighting financial crime, as is required by regulation across the world. We aim at 1, painfully high process costs which need to be tackled, and 2, far too low crime detection rates around the world. For that, we've built a planet-scale platform delivering real-time transaction surveillance. We detect suspicious behavior more often, more accurately, and 70% less costly than others. Our platform and its machine learning algorithms are programmed to work across networks of banks and other financial institutions, as opposed to today's on-premise outdated software which always runs in silos. We think that after spending more than $200 billion globally every year on anti-money laundering, bank silo thinking must be over. Because we believe it takes a network to defeat the network of criminals. My team and I are based in Munich, Germany, and we know we can accelerate the growth that we already have because we've done it before. We've successfully built the payments processing business and sold that for 200 million a few years prior. Thanks.
So when you talk about the network of banks and transactions, what you're trying to do is detect a series of money movements that end up in a bad bank, or I mean, what are the types of things you look for either fraudulent or terrorist type transactions? Yeah,
I mean, there's really 2 dimensions. One is let's say in a time dimension. So we look for a change in behavior, outliers in the way a specific account, for example, behaves. And the second dimension is the network dimension, which of course has to do with counterparties and people that send money to and from each other. And if that changes drastically, there's also initial reason to call it a suspicion and flag an alert.
So much of money laundering. Oh, please go ahead.
I was just going to ask about the kind of false positive. If you're flagging alerts, you get false positives, and of course that takes time for people to track through. So how do you control?
Yeah, I mean, one of the promises, the efficiency part of the promise really is to reduce the amount of false positives. That's the sort of common issue in the industry, which basically is known to be anywhere north of 95%. In terms of false positives. So we do learn from the behavior of the bank or the financial institutions in the way that they work on those suspicious alerts and how they file them basically. And based off that learning, we avoid them going forward by predicting that a false positive is kind of coming around the corner again. And then we can speed up the investigation or avoid it altogether. So that's our way of driving efficiency. And we've seen 40% and more in some of the cases that we've got with customers in terms of reduction rate there.
So in some ways, then, is this, to build off that question, is this about net? Is this about capturing more of the kind of spurious activity, or is it about actually correctly identifying the stuff that would be falsely flagged?
I think the net effect is an efficiency gain for the bank. I think that's clear. With 95% false positive, not very difficult. I guess you've got so much work and so many people working on essentially almost worthless alerts. So yes, but you're right. It's a 2-step approach, right? It's first reducing false positives to make room from a resource perspective, and then doing the more right thing by detecting more relevant suspicion to sort of protect the institution from risk, be it reputational or fines or things like that. But it's a net effect which is negative on the resourcing.
So much of money laundering is outside of the formal banking system. Do you already incorporate crypto and kind of other informal movements? A, and then B, I'm curious sort of what your expansion plans are beyond Europe.
Yeah, so I mean, money laundering in general, I think the total is like 1.3 trillion US dollars, I think, yearly. It's not really broken down by the UN in terms of what's exactly where. So there's some aspect that is going to be in blockchain or crypto, but I don't think it's going to be the majority at this point. Our solution to working with crypto is typically to partner with people who are better in investigating in the chain. So the things that we are doing is really they are focusing on card, ACH, SEPA, SWIFT, those kind of bank transfers, if you want to call it that. So that's the focus. Expansion plans. We've started to expand to the US after the first results in Germany. So we've seen first customers in the US, in the process of building the organization over there now.
In terms of how you guys make money, I assume there's some kind of implementation, customization, and then like what's that model look like, and how does that sort of scale?
Yeah, I mean, there's a setup fee typically, which is associated with the integration essentially. But then we typically see 5-year contracts, sometimes longer, and in those 5-year contracts we see monthly SaaS fees, which typically depend on the amount of transactions to rate.
And when you're pitching to banks, in a crowded space, what is your kind of main differentiation, unique point?
We believe that we are much more operational and infrastructural, if that's the right word. We believe that as payments processing people, we've built a platform that really isn't AI first, if you want to call it that. It's something that has to do with like real-time transaction surveillance. It's about milliseconds of response times. It's about scaling that system horizontally, of course. It's about those kind of things. And on top of all that, of course, we've got machine learning sitting both for the false positive reduction as well as the anomaly detection. But we believe that that space is crowded. I think it's more the sort of repeated monitoring of transactions at scale, which a typical analytical player wouldn't be able to do.
And is it mostly monitoring wire transfer and deposit activity, or is it just sort of everything?
We do it all. So we do a fair amount with acquiring banks, for example, both on the card side as well as then heading out to the merchants. But also bank transfers, ACH in the US, wires, SEPA, SWIFT, the whole lot. So I mean, essentially the type of transaction as to a team of payment specialists who've been doing this for 20 years. Doesn't really matter that much in terms of getting the data in, and we do it all because it makes sense also to sort of cross relate developments in the respective spaces.
Okay, thank you, Tobias. We really appreciate it. You've been great. Okay, so we've heard from all of our entrepreneurs. The audience has been voting in Slido, so let's see what's going on there. Let's look at our Slido results. Right now, Track is heading away, but nobody is totally without. So let's go back to our judges, and we're going to let you guys discuss it. Give us your thoughts about who should move on to the finals. So you guys take your time. I'm going to give you guys about 10 minutes to discuss this, and then I'll be back to get your final decision.
Awesome. Thank you.
Well, it's kind of interesting. The audience's vote is not the same as mine. I don't know how you guys feel. Mainly because I worried about the amount of competition in the track space, and they seem to be sort of in the middle of what a lot of other people are trying to provide, and we've seen a lot of stuff there. I did like Identic. I mean, I think that. I like the notion of relative privacy and still the ability to do it quickly, and with the peer-to-peer. Excuse me.
Bless you.
I don't think the 2 second issue is as much of an issue. So I think that's you warned us about your construction issue.
Are we live right now? The audience?
I think we are live.
I think we are.
The audience wants to hear how we think. I love the Ag Unity as a business, as a service, and doing wonderful things. I'm not sure that I love it as a business investment, just because they rely a lot on the NGOs and governments to get their distribution. But there are a billion farmers, so the question is how much. If they can get $1 dollar a year per farmer, that still becomes a big business. But I think it's a harder one to get all over there.
I do wonder, Howard, about the Ag Unity. I didn't get a chance to ask the question, but the collectivizing of effort seems to me like an opportunity to actually change the economics too, right? So as these folks move into kind of the more cooperative model, and that's my question about capacity is at some point you could also see kind of credit, right, and lending kind of play nicely, right? If I'm selling through my crop, right, every season, then maybe I need to expand my crop. And so I thought there was something there. I agree with you, actually. I do love kind of impact businesses. So I did like that one. I was curious on Track. I think my concern there, when I asked about disintermediation, was I think it was maybe similar. The layer of kind of data and kind of calculation that Track is doing, I wonder if just building the next feature is enough, but I really love the space. Like it seems like it might sit right in the pocket of an annoying enough problem to solve that maybe Lance won't want to solve it, right? Maybe some of the other folks won't want to solve it. That might be a sufficient pocket for them to kind of stay and live in. Okay, what did you think about the rest of these guys?
Melissa?
So Ag Unity, I really like the space and have invested in the space for a while. But I do feel that localized solutions for different cultures are really important in this space, because users, new to internet users have to have experiences that are highly integrated into their daily lives. And the life of a farmer somewhere in Nigeria is completely different than a village in Peru or otherwise. So it's hard to build kind of a scalable product and assume that the US can use it. Absolutely. Savings and investment is an exciting space to digitize around the world, and there's lots of interesting things going on. Track, I think, is a massive problem that they're solving. And so it absolutely is the question of whether a multi-product API play will get there first in terms of the largest platforms versus them. But I thought the founder pitched well and had a very clear proposition for why they have a shot at it. Identic, I thought, was clearly very strong founding team. Very hard for us to evaluate in a short pitch in terms of the core tech and how differentiated it is in an extremely crowded space of AML solutions. Sorry, that was for Hawk AI in terms of AML solutions. And Identic, I thought, was really interesting. I'm really interested in the space in terms of new digital identity solutions and what sort of the next phase of authentication will be. A peer solution, if this marketplace of credits that looks like carbon credits or crypto is adopted widely, could be very powerful.
Yeah, I agree with you on Hawkeye. It's a very crowded space, the AML space. Identic, I like what they're doing. I understand the mathematics of it is basically you create a hash function of the name and a bunch of parameters, 10 or 20 parameters. And people come back and say, I have that same hash function in my database. So I know this, which essentially means I know this person, even though I'm not telling you who it is, and you're not telling me who it is. So I kind of like Identic. I worried with Track about the competitive nature of the space. It is going to be a big space. There's no question. The gig economy is growing, and gig economy employees are in multiple gig players. So they drivers are in Uber and Lyft, and sometimes Via if you're in New York, and TaskRabbits do other things as well, and they may do delivery services. And so I get that part. The question is Lance, I know, is providing some of that, particularly on the 1099 stuff.
Yeah.
It's the health benefits, I mean, what I like is the fact that eventually they can be sort of agents for health benefits, retirement benefits, and so on. So that part kind of works. But so for me, in terms of a winner, it's probably between AgUnity and Track. And I'm a little less concerned, Melissa, that in terms of localization. I mean, I've seen with Acumen we have solutions that work in India and in Africa, and yes, you make slight tweaks, but at that really lowest level of where people are just getting on the internet and just getting literate about it in the farming, a lot of the same problems are there. If they have a co-op that they're selling to, the co-op around the world are providing similar services to their members, these very poor farmers, and a lot of them are female.
I'd throw a question to you too. I thought I really love the concept behind Identique and the kind of peer-to-peer multi-factor that appeals. Yeah. I actually wonder though if, and this might seem odd, but I feel like if you take that premise and I ask myself kind of where could another player come in and effectively do the same thing without as much opt-in or kind of sales cycles, I just wonder if it's not handsets. I wonder if it's not Apple or other, you sort of, where is my peer-to-peer network? Where does it exist ubiquitously? And where would I probably, sort of pay in, if you will, myself, with data potentially in a way that could inform, authenticated like combinations of like, this is Howard's actual information, this is actual information. So is that a strange possible, I
don't know, because Apple obviously could be a player in this, right? When you sign into Apple, but the whole point is that you need a couple, 3, 5, 10 major players in it. If you get Apple and eBay and some other big stores and so on, retailers in there, you start to get enough of where people mostly are. Walmart.com.
Yeah, that's fair.
That I see that, and I see the benefits to them and to the Targets of the world for joining such a network. I just wonder how much they can extract for how much value they can extract for this. I
think if they could, they'd want to be the owners of canonical identity, right? And so as I've been seeing that Apple ID SDK is popping up in more and more places, right? Even places where I've used a Facebook auth in years past, now there's sign in with Google, sign in with Facebook, sign in with Apple ID, and I just wonder if that's not their Trojan horse to kind of further extend their control over the kind of canonical identity space.
They're certainly trying to, and that's why you have LinkedIn, Google, Facebook, and Apple OAuths now, and Microsoft for a while as well.
Exactly.
So this is a way to get out of that sphere, which is kind of.
We didn't mention
fact,
Sparker.
That's actually a plus in terms of how Attract could be as a platform for all of these larger players that are building their own networks.
Yeah, we didn't mention Sparker. You're right, and having a lot of experience with OnDeck Capital, which is one of the first lenders in this space. I think what Sparker is doing is pretty big. I see it with small businesses buying phone systems and buying, as he says, medical equipment and things like that, where you're not dealing with a giant player who has already tied up with a lease financing organization and cannot offer it on their own, but you are getting that 1 minute sort of point of sale authorization, which could be very big. It could be very big, and I think he's doing that pretty well. Yes,
okay.
Rachel?
I hate to interrupt you guys, but we're at that point where we have to know who's going to move on to our finale. So I need you guys to pick one of these amazing entrepreneurs to be in that session. You guys have any votes? Any consensus?
It's a hard decision. I just want to say on record, though, I think that, everybody did really well. Like clearly strong companies, strong IP and traction, which is great,
Yep.
Yeah. Seriously.
Okay. So anybody want to be brave and name one to start?
I'm very torn, but I think I will name AgUnity because I think it's both because of its impact and because it is a giant market, a massive market, and it is kind of worldwide. I know Rachel. I know that not everybody agrees about the worldwide thing, but I see it as pretty much worldwide.
Okay. Melissa, are you ready? Are you in with Ag Unity too, or?
It's a hard decision. I would be supportive of Ag Unity, but if I had to vote, I would say track in terms of solving a particularly salient point for U.S. fintech consumers and gig workers right now, when there's a lot of confusion around tax and benefits and healthcare, and for a very strong pitch from the founder.
And so, Ron, do you want to break the tie here?
Oh man, I got to break the tie. Yes, I'm torn, and I do have I think I do have a vote here, but I really did like Sparker as well. I think the track pitch was super tight, and I think there's a lot there. But I do think Ag Uni it's actually the one space where also I think there's just not going to be as much attention, right? So of all the pitches, it's the one where I think there's probably the least competitive energy in the way that is being done by Ag Unity. So I can get on board with Ag Unity.
Okay, so it looks like we're sending Ag Unity to the finale. Congratulations. Congratulations, David. And can we please bring all of our entrepreneurs back on? You guys all did amazing. You all have amazing companies. We really appreciate it so much. So congratulations to all of you guys. You were very brave. We really appreciate you doing this. And remember, that these are all going to be part of our Global Connect. That's the networking platform that opened on October 12th. And you can find more information on all of these companies as part of our MoneyFest agenda. So thank you so much to our judges. You've been amazing. We're grateful for your insights. And I want to thank our sponsor, MasterCard, for their support. And we'll see you all at MoneyFest for our Money Pitch finale. We are finding out who's going to take it all the way with the cash. So remember, it could be more than one that gets to brag. So join us on October 26th at 1:18 p.m. Eastern Time. And again, thank you to everybody, and we wish you a happy day.
Thanks all. Great pitches.
Thanks, everyone.